Hi, everyone. My name's Anshul. This is the June15 Podcast, and today we have with us Shannon Hay. Shannon is the Senior Vice President of Commercial Lending at the Midwest Bank. He specializes only in accounting firm acquisitions, and he's been doing this for more than a decade. And get this, I want to get this right. He's done 400 acquisitions worth more than $250 million. That's just astounding to me. So, Shannon, welcome and thank you for
Thank
being
you.
here. We sincerely appreciate it.
Well, Anshul, thank you so much for having me. It's a pleasure and a privilege.
Great. So, tell me a bit more about your background. Like, how did you come to do what you're doing? Specializing in acquisitions and that to
Yeah,
accounting firms, that's quite a niche. So, tell us how you
it,
got here.
it is. It is. I started my career as a special assets officer for Bank of America, and we were doing loans to doctors, dentists, and veterinarians. And they launched a lending vertical that was designed for lawyers, insurance agents, and CPAs. And what we found was that, or what I found is that the accounting world had such a rich, just deep society community, and it was really easy to just sort of intertwine with. There's also a rich broker representation of accounting firms for sale, and so there's probably a golly probably 50 nationwide brokers that represent accountants in their quest to sell their firms, and then they align those with buyers. And so as a lender or banker, it seemed natural to niche myself in that. And what that allows me to do is repetition just creates expertise, and then I can share that expertise with my customers, and then hopefully in that they find benefit from prior deals, right? Sharing my knowledge from prior deals in their current deals, and so really adds for a boutique kind of service that again it just allows me to fine tune my advice and in the process. So
Yeah, that makes sense. And with everything that's happening in the accounting space right now, like everyone's talking M&A.
yeah,
So, tell me
yeah.
more. Like, what's happening in the M&A space? Like, what
Oh
are some
gosh,
trends you're seeing?
yeah, yeah. Well, you know that 75%, I think, is the number of AICPA members will be over the age of 65 in the next 5 years.
Wow.
So with that comes this what we refer to as the silver tsunami, and it's just this large amount of firm owners that are coming to market that need to have a succession or a transition plan in place, and so it's really causing, I think, the market to just become more rich with opportunity. But as well, there's also a new kind of influx of buyers, right, that aren't necessarily accountants, right? They might be project based, they might be tech driven. Private equity is driving a lot of that as well, but you're also seeing a lot of independent investor type individuals that have a private equity mindset of consolidation, but aren't necessarily accounting or accountant backgrounds, and so they just recognize the value in the professional services industry, and are really driving into the market. And so it's a great time to be buying or selling an accounting firm. The market is very rich. So,
So, other than the people who are retiring, like what I'm trying to understand, like who are the sellers, right? So, one motivation for them is just they're nearing retirement.
yeah,
But is there something else too that's driving, like what's driving sellers to come forward?
yeah. Well, it's mostly retirement, right? It's mostly sunsetting or succession. There are, one-offs where I'd say that, folks are maybe reaching a precipice or a plateau that they can't seem to get beyond. And so some firm owners will say, I've reached the 2 million mark, and I don't know how to get beyond that. And the only way to get beyond that is to find somebody with a, greater understanding and expertise on how to manage this business, upward from here. So I've seen that. I've seen just burnout, right? So ownership can create some burnout. But the majority of it is just reaching that retirement age, succession. Honestly, I think that there's probably more firms out there where the partners are waiting too long to retire and they're holding on too long. But I think that again, the market is, it is a good opportunity for both sides of the equation, I think. So.
And what's the size of a typical firm? So you mentioned 2 million. Like, is there like a common size of a firm that's more likely to sell or that is selling?
Yeah, so it really comes down to how many partners, right, or how many owners, because I think that a firm reaches a level that it can it again plateaus when it when it gets that one partner, probably 1 million mark. There gets to be a point where you can only hire so much and do so much right individually, and they tend to get caught up in that work, and it kind of you know plateaus them. So yeah.
Okay. So buyers, like I'm going to ask you more about private equity because that's what everyone's
Yeah,
asking
of
about.
course, of course, of course.
Not everyone's happy that private equity is coming in. There's a
No.
lot of fear about what that could mean for the culture, for the firms. What's your take on that?
Well, the unfortunate part is I don't believe the industry has done good enough a service of creating its own succession plan, right? And so there's an accountant shortage in the United States, about 200,000 CPAs short of what is needed to facilitate the succession of these firms. And so, with almost a quarter million shortage in staffing, it's forcing solution. Right? What is the solution
Shannon,
to that
you
problem?
froze.
Well, it's is that me? Oh, sorry,
Hmm.
is that me? Are we okay?
Yep, yep,
Okay,
we're
good.
fine now.
So the solution is going to have to be technology and outsourcing, right? Offshoring. There's just not enough talent to lift up the work that needs to be completed, and unfortunately, I believe the industry and its successors, right, the retiring partners, they haven't really done a good job creating that solution, the technology, the outsourcing, the talent that's going to take their place. And so private equity is solving for that problem, right? They have that solution by conglomerating firms. They create efficiencies of scale, which then allows them to add tech to it, and then allows them to offshore it or outsource it. And so they're moving at a speed more rapid than I would say the existing firm owners, and so they're bringing the solution to the industry. So it's like I say, I think it's a necessary evil, because it definitely is causing compression in the market, which means that there's so much private equity entering the market so quickly that I think it's causing price influxes or miss maybe higher values than what might really be there. It's yet to be determined, right? Because this is the beginning stages of what would be the consolidation, and where that lands or where that ends up. Private equity's been successful in other industries at doing it. Hopefully, they're as successful in accounting. Hopefully, that moment comes to fruition. So,
I think it will. Like my personal view is private equity loves industries that are traditional, that haven't changed at a pace, as you said, that they should.
yeah,
And it goes beyond like technology. It involves like talent shortages. It also involves like evolving business models. So
yeah,
I think I'm new to the accounting world, right? It's just been 2 years for me, but there's
sure.
something I see that there's still a lot of old school thinking that's happening, which
Very
has
much.
its value. But
Yeah,
given the current situation,
yeah.
it's
Well,
challenging.
value is driven by tradition, right? And
Yeah.
sometimes tradition can mean that we don't want to change, right?
Yeah.
And and that wrestles with itself. And I think private equity recognizes that opportunity and is taking advantage of it. So
So let's talk about talent shortages, right? I love that topic, selfishly so, but I do.
sure, that's okay.
Um, so one thing we talked about last time was, right, that's at the Engage conference, there were close to 30 offshoring vendors, right?
Yes.
We talked about not everyone's going to survive. Some of them, most of them would be a short story, but some of them would do well. Tell me more about your thoughts on what it would take for a few of those vendors to come out on the top while others will not.
Oh goodness, I think it's very similar to what makes the best accounting firms the best accounting firms, right? Is can you deliver quality service at a reasonable price in a acceptable fashion? I don't overpromise, and make sure you can deliver on what you do promise. Scaling accounting is not an easy task, right? And I think that though technology exists, I don't think that AI and technology can catch up fast enough to the shortage. And I think that the offshoring outsourcing is the solution to that, right? That's the middle ground of the technology solution that may exist down the road. Um, so yeah, I think that obviously embracing those technological components, but as well delivering on again, just delivering on what the expectation is. I think if you're able to do that well, just similar to any of the greats, right? It's the
Yeah,
the Amazons and the Walmarts of the world, right? If you can do that well day in and day out, I think that's going to be the variance, right? I think keeping up with your promises, right?
I agree. I think there's a lot there because I see a lot of offshoring that happens in India, and culturally, I know a lot of times people would promise things that they won't be able to deliver with the hope that we'll catch up when the
Yeah.
time comes.
Right.
But here in US and Canada, it's more about setting clear expectations that, hey, this is what I can do for you. This is what I'll try to do for you.
No.
And that cultural mismatch often ends up in disaster.
Yeah. No. Well, it's very much what I do on a daily basis. And Shoal is that, I tell my customers a certain timeline, and they have many parties involved in that timeline. It's not just I'm the one delivering the expectation. So if I deliver an unreasonable expectation, or I don't follow through with that expectation, then I'm not really I'm not doing my job to the best of my ability or their expectation. So
Yeah. And
yeah.
and I also think that I think as an industry, we're expecting too much out of AI too soon
Oh, yes.
because I mean, right now it's just fun, right? There's people who are doing great things with it, but it's still not ready to go mainstream. It's just still making so many mistakes. And I think we just go crazy over new technologies and be more optimistic. A few years back, it was like Bitcoin and cryptocurrency.
Yeah.
And AI has existed since the 80s, right? Excel
Yeah.
has AI, Microsoft PowerPoint has AI.
Yeah.
So I think it'll help, but not in the way most people want it to, and not at the speed most people want it to. So
Yeah.
um, I agree. We need to figure out other ways of addressing the talent shortage.
Yeah. No. Well, I think that it's never too late to continue to encourage um, the youth or the generation below us to pursue that. This is still a highly intriguing and exciting career path. I really think the AICPA or the CPA industry as a whole owes it now. It's never too late. It's never too late.
Agree. And I think CPA just has a branding problem. It's just not considered glamorous. But
Yeah, yeah. Doesn't have the same as that, the finance industry or the banking. It's just doesn't have that, or this, being a stock trader or something along those lines. But that's the same talent. They're recognizing that they can make more elsewhere using the same knowledge, and we've got to make CPA appealing again, right? To be the trusted advisor needs to mean more.
yeah, I think so I'm not a CPA, but like when I talk to CPAs and when I've been learning so much, I feel it's one of the only safest, like a safe job left, right? No other
Yeah,
job is safe. But
yeah.
CPAs, I feel like they have job security like no other profession.
No, and
Uh,
more so now today than ever as well.
oh yeah,
More than ever.
absolutely.
Yeah, more than ever.
So like building a global team, right? How does that help sellers? Like, do you think that helps increase valuations? Uh, like,
Yeah, yeah. If you already have, as a seller, if you already have a solution, an offshoring, outsourcing solution that exists, it means you're already solving for the talent problem within your firms. That means within your infrastructure, you're already solving for a talent shortage because most firms currently in the U.S., if they're not offshoring or outsourcing, right, they're turning internally and they're recruiting and they're spending a lot to get that one or that U.S. talent. But if they have that offshoring or outsourcing solutions, I mean, they're already creating efficiencies within their firm in a way to increase production, right? Because that's the challenge today with most firms is they don't have the ability to grow beyond their staff or their capacity, and they don't understand how to do that or where those solutions might lie. And if you've already created that solution for your buyer, right, and they know they can come in and make it bigger, right? Because that's what we're buying opportunity for growth. That's one of the primary reasons why most buyers buy is that they want to grow it, right? They want to make more money than the seller made. And if you're creating ways or solutions to do that, I really think that you're creating a value that not every firm has, and probably would create more value within your firm because of that.
I completely agree because when you have something like this, you're not just selling your book of business, but you're selling the solution to one of the biggest problems we're facing right now.
That's right. I Yeah, concurred. I could, yes, yes, wholeheartedly. It's also opportunity, right? Not to overemphasize that, but if I'm trapped in my capacity, right? But it, or you have one firm that is and one firm that isn't, right? I'm always going to choose the firm that has greater capacity or greater upside. So,
Oh, that's a very good way to put it. I'm gonna steal that, Shannon.
oh, please, no, please do, please do.
So there was one thing we talked about last time was the difference between offshoring and direct ownership, right? With direct ownership is you own everything in the offshore location, India or Philippines, the office, the people, technology, processes, and outcomes.
Yeah.
So tell me more about why you think that's different or better than just working with a third party in, let's say, India or Philippines.
Wow. I mean, that's like why, you know, you probably address that many times in your own firm, right? Meaning that you make a decision whether to control something internally or whether to depend on somebody or trust somebody else to control or handle that for you. Just in anything else, I think direct ownership allows for a greater control and allows for greater project flexibility. Probably allows for greater continuity over time, simply because of inner workings of you know look, you're even though you might own it offshore, you're creating a culture offshore, right? And so
Yeah.
then your culture from your firm and the greatness of that culture can then bleed into the culture of the offshoring firm. And I think that that culture cohesion probably creates a place that doesn't exist in a third party contract or some you know offset type thing. So
No, I think I agree. I think the culture is a big part of it. One of the things I hear a lot from people I talk to is the lack of the inability to transfer their culture to their offshore team,
yeah,
because with culture, like you get to decide how we work, what we value. Do we value volume? Do we value quality? Do we like what is it that we value? And whatever you value is what your offshore team is going to value, because that's how they know they're going to get promoted or rewarded. So I agree with the culture part. That is, I think that is the missing piece in the current offshoring landscape.
yeah. Well, and you bridge, you can, there's certain things that happen within culture and infrastructure and all that kind of intertwine, right? And so how you react to something can be based on the culture of the firm itself. And you want that culture to bleed through so that that reaction is similar and there's not a disconnect in what might be important or what's important to the client can then follow through to, the Indian firm, the Indian group, right? So,
Yeah, makes sense.
yeah.
So there's something I noticed, right? You know more about this, so I made an observation.
Okay.
Private equity or buyers, I keep following the news. Anytime they buy someone, right? They buy a firm,
Yeah.
they end up opening an offshore center for them. Like almost like that's always I've seen that like big firms too.
Yeah.
They get big investments, and one of the first things they're doing is they're
Right.
finding efficiencies or they're setting up a team in India or Philippines.
Sure.
Is that something you've seen?
Yeah, I'm not close enough to the PE deals to know that for certain. But I would say that if I was going to do it, and I'm thinking logically, right? What makes the most sense? Again, solve for that talent solution right away, right? That's the way they're going to be able to do that, or that's the way that they're going to be able to accomplish that is, and so they know that ahead of time, so they're buying with that intent, right? What would be great is if sellers had that intent already, right? Or if firms were being prepared with that intent, because we know that that's what the market intends to do with it. So let's go ahead and start that. It's similar to like you think of 10 years ago, like getting your firm into the cloud, right? It's like it's
Oh,
really, that was a really hot topic of are you on a server or are you in the cloud, right? I would say today is do you have an offshore outsourcing talent solution or do you not, right? And you either do or you don't, right? It's not.
yeah.
So yeah, yeah.
You're
I think we're at that moment where
giving
you.
me such amazing stuff, right? Like for my conversations, like
Yeah.
server versus cloud, that is genius. Like I should have thought of that. So
Oh, thanks,
I am
thanks, man. I
so
appreciate
happy.
that. Hey, my pleasure. My pleasure. I'll
um,
send you my bill.
so one thing I also want to talk about it. There's a stigma. Like I was born in India. I grew up in the U.S. But
Okay.
I remember those early calls, customer service calls, early 2000s, right?
Yes.
those horrendous calls. I think that has led to a stigma. That if I offshore or if I build, even with direct ownership, if I build something in India, it's gonna be bad. So, and then there's a lot. There's like ignorance. There's some prejudice. So all of this, I feel there's like a stigma to offshoring. So how do you address that? Like, or what do you tell your?
Well,
Yeah,
so look, I mean, that's tough, right? It's a
I
tough
know.
one to address, right? Because I think there's so many poor logic, mostly, right? But I think too, though, that there was probably a time and a place where the mixing of two cultures was difficult, right? And I think that that's gotten easier over time. I think that there's more greater acceptance today than there ever was. Look, in my banking world, right, I was in finance. Started my career in a call center for American Express, and they in the early 2000s outsourced our call center to India. That talent then went into the world and did different things, and those like me, like I was a skilled over the phone representative. I exchanged a better career for that, what I would call secondary work, and not that it was by any means. It was, I was proud of the work I was doing at the time, but I was kind of, at the time, I was sort of a victim of that outsourcing, right? But in retrospect, it up leveled my skill, made me become better at what I do, and made me find a higher level to operate at. And that work was taken away in a good way. Um, and I think that is, we've got to get to that point where we recognize. I always say to I always say to professionals, right? It's like, do you mow I love mowing my grass, right? There's nothing wrong with enjoying mowing your grass. I like seeing the lines and the finished product when it's done. But at the end of the day, I make too much per hour to spend. If I could spend an hour making more money, right, rather than mowing my grass, if I can make $3,000 an hour and pay someone $30 an hour to mow my grass, why am I mowing my grass? It's I must
Yep.
I only enjoy it, but it's not a valuable use of my time. It's not. It's just, or there's a danger to it as well, where I might injure myself or cause myself to not be able to create the income because I'm tied up with the other side of that, right? I think that we've got to come to a point where we have to understand that we're better because of it, right? We're better because we create efficiency in our own time, right? Time is the most valuable thing that all of us has, and the more that we can create, the better we can serve our customers, the better we can serve our clients, the better we can rise up to that next level to be a better provider. And really, I look at it as like, why wouldn't you want the help? Why don't be stubborn, don't be prideful, don't let your past experiences get in the way of the best solution that could possibly be presented to you. Sorry, I feel like I'm selling outsourcing, but it just, to me, it's just
Sure.
logical, efficient use of time, right? We've got
I
to.
I was thinking, like, as you were talking, I was like, he needs to be my spokesperson. Right? You're doing.
Right.
Um,
Well, no, it's
so
it's true though. We need to
I
recognize
agree. I I completely agree. Right. I think what you said. It's just about figuring out where like finding more value for your time. And um, so I also want to talk about if somebody, let's say, wants to get a loan for
it.
setting up operations in India.
Yeah.
Is that even possible? Like most loan amounts would be small. By small, I mean like they would at least be 50,000, but they could go all the way up to 300, 400,000, depending on like the size of the team they want in India. Is that
Yeah.
even an option to get a loan for something like that?
So I'm an SBA lender, right? So I use the SBA program, which is a U.S. government guaranteed lending program. That program goes from 0 to 5 million, and it really wants to focus on the $500,000 and less loan, right? So they're highly focused on trying to put working capital in the hands of small businesses to allow them to facilitate growth, things along those lines. So my small loan desk, which is 150,000 and less, they do working capital lines, express lines to existing businesses with existing cash flows, and whatever purpose they want to use that money for, as long as they're approved for it and it's designated, yes, by all means, marketing, equipment, whether it's just straight working capital, investment in their infrastructure, I think that's all applicable under the SBA program. So yes, a U.S. based company wanted to borrow working capital to facilitate an India expansion. I can't see why that would be. You have to have the existing cash flow, right? You have to already you have
Mhm.
to be a good business in good standing with good
Absolutely.
credit. But yeah, but by all means, if you needed to borrow a couple $100,000 to if you were say you're a $2 million firm and you want to borrow a couple $100,000 to go start an India team, I think the SBA program is perfectly designed for that. Yes.
And what's what's the process like? Do we need collateral or how does that work?
So the collateral is the goodwill of the business that's borrowing the money, right? So the existing business, the existing firm would be based on its own
Yeah.
cash flow capacities, right? So they're going to review the last several years of financials, and if there's enough cash flow capacity to justify lending that money, then it's lent on a 10-year term. Rates are probably in the mid tens, mid to high tens, and there's no prepay on any of it, so you can borrow and accelerate it as much as you like. Um, so yeah,
And how long does the process take? Like, is it? I'm just trying
probably
to understand.
40
Yeah.
0 to 45 days probably is the average. Is probably the
Oh, it's not
goal.
bad. Yeah.
Yeah, you probably do as fast as 30, but it just depends on how big the loan is and what the necessary requirements would be for that particular loan.
Okay.
Yeah.
I really like that option
Yeah.
because sometimes that could be the way I think of it is if a bank looks at the proposal and they like it too and they're willing to lend you money, that's a big vote of confidence for the accounting firm owner as well that hey,
Yeah.
uh,
Yeah. Well, we could justify the investment, right? So through the projections and through the benefit that would be received from it. So if we're able to see that and you're able to articulate that to us, then yes, I think that we would be very supportive of that type of business decision.
okay. So my last question, is there something I didn't ask you that or something you're passionate about that you'd like to discuss today? Um,
Yeah, always.
hmm,
So we talk about private equity, right? How they're entering in the market and how they're kind of creating this influx of shifting the market. What I would say is that don't be discouraged if you are an entrepreneur and you have the desire or quest to compete and own a firm or own a business, right? That there are programs in banks like me that offer a way to compete against private equity, right? We can now give you the capacity to bring cash into a deal, which then and then cash flow the deal, and we include working capital in that transaction. And then if you have an advisor like me that's seen a lot of these deals, I can help you through the nuances and get you to the ownership closing table, and then you can start to use services like Insurals to grow your firm in a more efficient way. And I'm just real passionate about the transition of the accounting industry, the succession thereof, and the future, and how it's going to be managed. So
I, I couldn't agree more, and I feel like I've seen private equity in other industries, right? So if you're an entrepreneur or an accountant or an accounting firm who's looking to buying another firm, I don't think there's any need to be scared
yeah,
because I can say right off the bat that you'd be a preferred buyer. Like if I'm looking to sell my firm, there's a lot of merit into not selling into private equity and into an investor or an entrepreneur. You'll just take better care of my
cool.
business and
Yeah, if you've owned it independently for 30 or 35 years, right, and you've managed that staff and you've managed those clients, if you're putting it in the hands of private equity, it's not going to be the same going forward. If you want it to be the same or you want it to like have some continuity, your best buyer is an independent owner that's going to manage it similarly to how you did. So
yeah. So I'll just say this one thing to my audience. If you are looking to buy a firm or sell a firm, um, oh, I think I lost you, Shannon, again, but
yeah.
oh, you're back now. Yeah.
Okay. Sorry.
Um, no, no worries. So, yeah, I was saying to my audience, right? If you know anybody who's looking to buy a firm, sell a firm, if you have any questions, you need expert advice, Shannon Hay is the guy to go. Like he knows more than most people. And I mean, I said in the beginning, like 400 deals, 250 million. Just think about that. That's the
Thank
experience he has, and this is the guy you need to go to.
Thank you. Thank you. And my cell phone is always open, 614-648-9199. And you can reach me via email at shay@umwsb.com.
Awesome. Shannon, that's all I have. Thank you so much for
Thank
your
you.
time.